All right, welcome to another video from the chart reader. So today we are going to do a review of the major markets. So that means the NASDAQ, the S&P 500, and the Dow Jones. So we're going to do the exact same thing that we do when we look at our sectors, right? When we look at the individual stocks, that's exactly how we're going to review the majors, right? So right now we're starting with the NASDAQ, just like we do with the stocks, right? We're looking on the daily and the weekly. I might look at the monthly as well. Again, NASDAQ, the majors, not just NASDAQ, S&P and Dow too. Those are a little more long-term views than I do on stocks, right? So I will do monthly as well. The exact same moving averages, the 8, the 20, the 50, the 100, and the 200 with their colors. And then the same manual lines that I draw up here, right? So the exact same upper view that we do. And then again, the exact same lower indicators as well, the MACD and the RSI. And look, it's really important to know what the majors are doing. I used to make this video daily. Now I kind of do my sectors, right? Just on, and I get more views on the other ones. But just because I'm not making this video daily, that does not mean I'm not doing this daily. In all honesty, I never move my money before looking at this, because if the majors are good, your stocks will do really, really well. If the majors are bad, your stocks will drop hard. Not just yours, mine too, right? So it's just that's how it is. You cannot beat the major markets. The real game is just following the major markets, right? If it's bad, adjust your strategies. If it's good, adjust your strategies, right? And that's the point of these videos. So look, we're going to start with the NASDAQ composite. We're going to look at the daily, and then again, we'll look at the rest. So what's happening? A lot of bad is actually happening, right? So 1, 2, 3, 4 days in a row, we've been trading under the 8 moving average. The exact same rule number 1 for stocks is the exact same rule number 1 for the majors. You must be over the 8 to be considered good. If you're under the 8, that's already game over in my book, right? Again, that's just my opinion. There's many trading strategies, but it does me well with that. 4 days. Not only that, what actually happened was there was a pretty good, actually a good 4-day run, and it just got rejected right here. The 20, actually almost to the penny on the 20. Yeah, look, you can even see a little wick came into the 20. So it actually closed right under the 20. And then this 1225 line that, again, I manually drew, right? And then just boom. We literally gap down to lose 2 lines, and then by the end of the day, we end up going under the 8 and then another consecutive 3 days. 4 days under the 8 is very bad, right? I mean, 1 day is bad, let alone 4 consecutive days. So right now we're in a really, really important channel, and I gotta go back. This is actually a really good view right here, right? The last time we were near here was end of June, 6:30. We were touching what I've colored in red because I've named this the death line, right? We tested the death line and then really made such a beautiful run. I'm going to zoom out at some point, but just remember this 13.6 number, okay, right? But we made this run to 13.6 and then pretty much have failed since. Again, though they're not drawn, 11,300, 11,500, and 11,700 were some really common numbers I was saying when I started making these videos. So if you go back, you'll hear those 3 numbers a lot. I did not like that we failed to beat seriously, 11,501 penny would have been good. This loss of $52, I can't believe we closed under 11.5. That has me just a little worried. Now, I like that the RSI is kind of trying to peak over, right? And I've always said the RSI low number is 30, right? So ideally, we might get a little push up, but look, I mean, I'm more interested up here than down here. I'd say 80% of the info is up here and then 20's down here, right? And man, we need to get over, we really need to get back to 11.7 at this point for me to feel comfortable. Because look, there's a lot of people talking about, correction, recession, the stocks are going to crash. For me, this 10.8 number is what matters, okay? If we lose 10.8, that's when I believe things are bad again. Am I going to say that this is like the to the penny correct? I have no idea, but I'll tell you, I believe it is, right? So, you know, do what you want with it. But that's a real quick daily view. Let's look at the weekly real quick. So again, we had that nice run that we talked about from that death test in June. Basically, that was right here, actually, right? The death test in June, all the way up to this 1300 number. Now, I'm going to draw a trend line, okay? So I do a lot of these horizontal lines, but what we basically had, I'm going to go from here to here, right? I'm going to do that, basically. We made a break of a really long downtrend from July, confirmed it again in April, and then again in August, right? So this looked like a nasty break. There was no moving averages in between on the weekly, but this 13 line caught it, right? And again, that's why I do like my lines, right? Because it gives me that something extra beyond these moving averages that are computer generated. I have no idea the math behind them, right? But this weekly went from breaking the 8, breaking the 20, and like breaking this downtrend line all the way to literally right now where we're at, right? So, and where is it that we're at on the weekly? Let me zoom in a little bit. We've come down and lost the 8 and the 20 for now. This week we got back the 20. That was last week, right? But nonetheless, let's start with the 8. We've been under the 8 for 1, 2, 3, 4 weeks. For a full month, we've been under the 8. It looked like we might have been making a test back over the 8, but then clearly this last week killed it, right? So this was 2 weeks ago, sorry. And right now, this 200 line is right here. I'm a little happy that it's above this line because, hey, maybe we'll bounce off the 200 and not come here. But again, that's a long drop, and we're looking at a weekly. So that could mean a couple of bad days, right? And look, I don't like that the RSI has the red over the green. That's not good, especially on a weekly, right? I'm going to turn to the monthly just real quick. I spent a little more time on this NASDAQ than I thought. But man, look at this monthly, okay? I really hope I don't even have to say too much, right? Just a couple immediate things, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Over half a year under the 8, right? That's not good trading. If your monthly is this ugly, that means your weekly is ugly. That means your daily is horrible, right? So again, that's why it's really good to zoom out and then zoom in, right? I kind of do it the opposite way, but again, it's do what you want with this info, right? What is kind of scary, but again, kind of reassures me a lot. Right now, this 50 line is almost on my 10.8 line that, again, this was manually drawn, right? And I'm just zooming out. I'm zooming out. I'm zooming out. Damn. I'm zooming out. Damn. All right. Look how, okay. This right here, damn, September of 2010. It's been 10 years since we've had a candle under that line, okay? Even here, we got really close, but it's never gotten under. We had a wick right here. We had a wick right here. This one, we got back up. This right here, actually, oh my goodness. It's been almost a decade, a little more than a decade, shit, almost. Wow, I don't know what year we're in. It's been more than a decade that we've been under that red line. This red line, right, the computer generated 50. And it's literally to the pen, not to the pen, just over it. But it's almost on my line. And I'm telling you, if we lose the 10.8, that's bad, okay? It's reconfirmed on the monthly. This monthly looks ugly. The RSI still looks ugly. The weekly doesn't look good. And then again, we're at this daily where it's, hey, I hope it does well. But remember, all we're hoping, what seems like, are a couple good days within that bad weekly and that bad monthly. So, man, I think I'm going to actually end this right here and make this an individual NASDAQ, because this was a really good 10 minutes. it kind of goes back to what we do on all the other videos, and then really just a solid view on I think what's a really important thing. Because again, if the NASDAQ's bad, that means tech will do poorly. That means a lot of the EV stuff, and you know, there's a lot in NASDAQ that the common people, the you and me's, right? That's what we like to trade in, because NASDAQ's the future, right? It's tech, and yeah, one day it'll be the future for sure. But immediately, it looks like, you know, trouble's a brewing. So the numbers to watch are obviously 10,805, right? Because again, this is 44, we're rounding up. The next one is 11,300, okay? The one after that is 11,500, which we're close to, but we're definitely under right now. And then 11,007. Those are the numbers that are not here, but they are important. So trade safely. I'm not here to ring the, you know, the doomsday bell yet. This line does that for me. So we'll see what happens. Trade safely. I'll make another video for the S&P and the Dow. I hope you're learning.